Well, everyone continues to track the narrative when it comes to those trade wars, and a lot is brewing there. In fact, markets are now nervous. They're also waiting to see, is China going to retaliate, and they haven't yet. So this could be either a case of waiting to see how negotiations pan out over the next month, or it could be that we may actually see, China actually force its hand sooner rather than later. We've got Adrian Mowat also joining us on the phone line. Adrian, good morning. All eyes continue to be really on the trade wars and the likely implications. Markets in particular seem to be really uncertain as to how to react right now. How are you reading the latest commentary that's coming in, both from China as well as from Trump?
Look, I think it's difficult to read it literally because, both parties in the middle of a negotiation.
Right.
Apparently the negotiation was going well up until the U.S. accused China of pulling back on some of their promises, which seems to be related to what China can do in terms of domestic legislation. I think the fact that the Chinese have invited Lighthizer and Mnuchin to travel to Beijing is encouraging. There also may be some theater in this as well. You've got the G20 summit in Osaka at the end of June, and perhaps President Trump was looking for the credit for the deal and would like to be seen as being the great statesman doing a deal with Xi Jinping. So for the markets, let's think about a couple of things here. Remember that we had one of the strongest ever moves in the first quarter of this year. Very large gains across the board. So I think markets probably were attuned to having an excuse for a bit of profit taking. We've adjusted expectations in the last week very quickly from there was going to be a trade deal to now a significant amount of uncertainty around that. The one thing that perhaps is coming through as you look at some of the economic research on the trade dispute is perhaps the economic impact has been overstated, and that these economies are both, in the case of China, strengthening. In the case of the U.S., is robust, as we saw from the GDP figures. So I'm sort of the view that markets needed to consolidate, perhaps correct. The trade war has given the markets that catalyst. And we probably are going to be range bound as we wait for the sort of G20 summit, which I think will be the next point to really focus on in terms of the trade negotiations. And remember, the last G20 summit in Argentina was the one in which Trump had delayed the tariff imposition. So that's the sort of broad market comment. I think at a more micro level, clearly this is pretty damaging for autos and to some extent tech hardware, as they will be more vulnerable to these tariff moves that have been put in place.
Okay. Adrian, we've seen a similar kind of fear which had really got the markets down for the better part of 2018. But eventually the Chinese and the Americans, they were able to reach a common ground. In this case also, do you think somewhere the Chinese know that they need America and the Americans also know that they need Chinese? Do you think there's going to be middle path, and that is something what markets are betting on? Because frankly, if you look at Asia this morning, Asia may be out, but it's not down.
Yes, so we worked down quite a lot last week, so we did do the adjustment. I'm a little bit cautious in looking at this in an overly logical way. There's a political aspect in that this sort of powerful, sort of strong, tough rhetoric against China is politically very appealing, particularly with Trump's voter base. We're not that far away from the next presidential election. I mean, it's a long way away, but unfortunately the politics starts quite early on. And I could see an appeal from the Trump administration in keeping this trade issue live because it works for their voter bank. And they don't seem to be particularly sensitive to the economic consequences. So there are, serious economic consequences at a micro level, whether you're a farmer producing soybeans or you're an auto worker. And these people did vote for Trump, but at the moment don't seem to be associating their economic difficulties with the Trump administration's policy. So do be careful about being too logical around this. I think the theatre and the politics is driving this more than rational macroeconomic policy.
All right, Adrian, really appreciate your time and thank you for joining us.